Carvan, I'm the Chuck in the market sub Chuck, and today, we're entering earnings season, so one of the first companies to report was Johnson & Johnson. I've shown this company before, but what I have up here is a 20-year chart on Johnson & Johnson. I want you to notice that this company has generated very consistent earnings growth over the last 20 years at around 12.5% a year. I'm going to shorten this chart a little bit to give a little closer detail. I'm going to drop this to a 15-year chart. I want you to notice that that number drops now from over 12 to 11.7, but still very consistent because obviously we have in the more recent times where we've had the recession. But please notice that this company has stayed very, very profitable throughout the recession. They didn't have a big collapse in earnings like some of the financials did, but they did have a flattening out. So their current earnings estimate is for $4.52, which was the guidance prior to, today's earnings announcement. But let's look at the company a little bit now. Earnings growth has been very consistent. You can see here that the earnings have increased year after year after year. Even though this is one of the slowest growth rates they've had, there's still going to be an increase based on that. The light blue area shows the dividend. The company pays a 3% dividend yield right now. But I also want you to notice that the black line, which are monthly closing stock prices, over this 15-year period, the black line are the stock prices below the earnings justified level in its normal price earnings ratio, which has averaged around 20 to 21 times earnings, for the last 15 years. So, Johnson & Johnson appears to be on sale based on this chart. They have a very strong balance sheet, a very excellent debt-to-equity ratio when you consider a $172 billion market cap. But what Johnson & Johnson did today is they raised their guidance. They came in at $1.20 versus $1.13, and they raised their guidance from $4.52 to $4.54 to $4.59. I'm going to put $4.57 in here, which is kind of a split the difference number, and I'm going to redraw this chart for you, and I want to focus on the forecasting chart because I think it's very important. At $4.57, this is how the picture changes. If I look out here, current consensus is 7.6% growth for JNJ. I'm going to call it 7 to 10%. The target price at its gram-odd value, assuming it achieved those earnings growth, would be $136.38 by 12/31/2015. If I go back to the previous chart, which was starting out at $4.52, then my number runs out here to $136.38. Nothing has really changed. In other words, that few cents in earnings hasn't really changed the future prospects for Johnson & Johnson at all. If you look at this company over the last 20 years, I want you to notice they have an excellent record of increasing the dividend every year. Normally you would be buying the stock at say a 1 3/4 to 2% yield. Today you can pick it up at over 10%. It has been a stalwart company. It's obviously one of the great companies on the planet. It's generated a return significantly in excess of the market over the last 20 years. It's probably as attractively priced at 14 times earnings right now, or just under 14 times earnings it's ever been. But the point is the market's reacting to the price. But what I'd like to do is show this fundamental research tool because I think it really puts everything into perspective. This is a terrific company. Looking at today's valuation, it's one that I would suggest you might want to look into closer, especially if you're looking for some growth with some good dividends and maybe some increasing dividend along the way. As always, I recommend you do your own research, but J&J is a company you might want to take a closer look at. This is Chuck Carnevale saying thanks for listening.